What is going on YouTube? It's Sankey and we're back with another one. Alright guys, so we kicked off a fresh brand new week in the stock market and some of our channel plays in the portfolio are on fire right now. So I want to make sure you guys are aware and set with a strategy so we can continually crush them as we move forward. Now before we get this show on the road, I want to touch on the portfolio. For those who don't know, I built this portfolio solely for the YouTube channel to show you guys in the most simplified way how we build and scale a portfolio in the stock market. And you guys know we've been building up this portfolio, reaching great heights before last week's sell-off in the market. But you guys know we didn't panic about that because, as I always say, the stock market doesn't just follow a linear line. Along your journey in the market, you're going to hit speed bumps, but you're always going to rebound strong. And today we've had a good bounce back in the market. Now this is because of easing bond yields, and you guys know I say those rising bond yields and that expectation of rising inflation caused the sell-off in the market. And if you've been adding our channel plays, it's not going to be long till we're back on top. Now before I get into it, I'm going to need you guys to hit that like button for me, and if you're new, hit that subscribe button, join the journey. Without further ado, let's jump into our first one. Up on screen we have VUZI. Now this is a smart glasses manufacturer that integrates augmented reality. And if you guys remember, I said you want to get your positions well built out in this play and ready because they're early leaders in a very fast growing industry, and we know they've got increasing use cases for their glasses. One is warehouse logistics, where they can scan barcodes and reduce human error. Another is in healthcare, where the professional can access medical records during patient examinations. Now, one of the reasons why they caught my attention was the increasing number of partnerships and collaborations that they're always making. And today again, they've come out and announced another collaboration I want to put on your radar. The M400, M4000 glasses are now going to be compatible with Microsoft Teams. Now they've got a webinar on Thursday to demonstrate this. This is good news. That's why you've seen that stock price have some good momentum today. Also means they're now rubbing shoulders with a beast in the technology industry. That's Microsoft. Got to remember, Microsoft Teams, they have over 100 million daily active users. Now if you guys remember, I said you want to catch this one under $20. As you can see, my average is $19.27. You guys had a couple of days to grab this one through the sell-off. That's just the power of buying the dips on these plays. Now the plan and the strategy with this one is to hold them right through as they win partnerships and collaborations and build their business. This is a play that's just getting started, and I'm looking forward to them unleashing their full potential. Up on screen, we've got CleanSpark, ticker symbol CLSK. Now this is another example in the market where sometimes you just got to ignore the noise. This one, they've been surrounded by short seller allegations, Bitcoin mining volatility, and a clean energy sell-off. Yet they're hitting their business objectives month after month. Now we know they're diversified in what they do. They've got their energy division, they've got their Bitcoin mining division, and they're growing both. In their energy division, I told you guys they recently made an acquisition of a solar company that's set to generate them around 20 million in annual revenues. On the Bitcoin mining side, we know they've deployed a lot more miners, and I'm expecting good revenues from this division. And as you can see, another strong performer in the day. And if you guys remember, I said this is a double up candidate from their low that we saw last week. So hopefully you guys managed to catch the dip in this play. As I always say, when you catch the dips in these plays, you're going to be rewarded. Now going forward, I'm expecting that stock price to be a bit more volatile. That's just the nature of CleanSpark. But they're set for good things as we move forward and they build up their business. Up on screen, that's DraftKings, ticker symbol DKNG. And it's good to see this play finally getting the recognition they deserve this year. Now, if you guys remember, I said you should jump into them last week when they were under $60 ahead of earnings. Sometimes, guys, you need to jump into these plays ahead of earnings because when they announce good earnings, that's going to give that stock price momentum. Now, we know they crushed their earnings, their Q4 outperformed estimates, and we know they gave good guidance going forward. So it's no surprise to see a good uplift on the day. And if you remember recently, Virginia and Michigan came online. That increases their total addressable market and increases their revenue potential. And as we move forward, more and more states are going to start to legalize gambling. That's going to pay into their favor. And one I've got my eye on is New York. If New York comes online, that's going to be a good revenue driver for DraftKings going forward. So it won't be long before we see DraftKings break into the $70. Now the way we're going to crush this one going forward is to catch the dips in this play. Strike price is under 65. Catch them under 65, we load up on this one. Up on screen, that's Lovesac, ticker symbol LOVE. Now I haven't mentioned this one on the channel for a while, but they're doing good things. So as you can see, strong performance on the day. I'm still holding 35 shares in this one, return just under 20%. Now what you guys must know is that every play is running their own race. Some get to the finish line quicker than others, but they're all going to get there. Now with Lovesac, they sell these modular sofas that appeal to millennials. We also know they make good partnerships with companies like Macy's, and they've been continually building out the e-commerce part of the business. Now what we're waiting for is some strong financials to push this one up into the $70. The plan with this one is just to hold them and ride the wave up. Up on screen, I've got Marathon Digital Holdings, ticker symbol MARA. It's one of our old channel favorites around here. First up, I want to point out their name change. They used to be Marathon Patent Group, so right now they're going for a rebranding and showcasing their commitment to crypto with the name change. Now we know they're looking to be a pure play Bitcoin mining leader in North America. That's why they're going ahead and deploying 100,000 miners. This puts them in a league above all the other miners. Now we like those plays that are ambitious, that make those acquisitions, that expand and grow their business. Marathon Patent Group ticks the box. As I've always said, the way to crush this play is to catch the dips. If we look at the charts, we know this one's volatile. It's only last week this play dropped down to $30. So I hope you guys managed to load up at that point, because as we can see on the day, strong performance. Now with Marathon, you never want to jump into this play as it's running up. Always wait for the dip. Entry price on this play, that's $30. Alright guys, Barocca with the channel. You know what time it is. The question is, wish I'd found you earlier, mate. Dabbled in stocks before taking it seriously now and learnt the hard way. In recent weeks with some losses, emotions, etc., I found having too many options in my portfolio often difficult. Great vids and well put together. Would you recommend keeping the portfolio smaller in terms of positions and having bigger position sizes to hit those profits well, or enlarge the amount of positions but keep the sizes smaller? Be great to hear your thoughts. Also, it appears you've got a spammer in the comments with the same name and profile picture requesting people to message them. So thank you for sending this in, I appreciate you. So that's right, we've got the bots and the spammers in our comment section. They're flying all around YouTube at the moment, talking about crypto, giving out WhatsApp numbers. All you guys need to do is just report them and ignore them. Now you mentioned you took some losses over the last few days, so it sounds like you're panic selling. So I agree with you, it's a shame you've only just landed on my page now, because right the way through, I've been saying you guys have got to get comfortable with the volatility in the market. That's just how it moves. And this down period we're in right now is only temporary. It's going to rebound strong. Now, when you see one of your plays drop down in the red, don't look at this as a loss. Look at this as an opportunity to grab a play on the cheap. Having this mindset is going to level you up as investors. Now I hope this small bounce back that we've seen in the market today has restored some confidence in you guys who thought that we were heading in towards crash territory. I've always said the market's going to rebound strong. You guys got the strategy and you know what to do. So in terms of how many plays to have in the portfolio, it all depends on how experienced you are as an investor and how much time you have to monitor your portfolio. So if you're brand new to investing, you should have a smaller amount of plays in the portfolio. This is because you're just getting the hang of things. You're learning the ropes, understanding those plays, understanding their price movements, and recognizing when to reinvest into them. If you as you level up and gain more experience, you can increase the number of positions in your portfolio. The way I like to look at it is, if you're brand new to investing, if you're new to investing, you should have up to 10 plays in the portfolio. If you're more intermediate, you can increase that to 10 to 30, and if you're more advanced, you can have 30 plus plays in the portfolio. Now me, I like to keep the number of plays in my portfolio quite high because it increases my diversification and reduces my risk. Also, there's a lot of good quality plays out there, and by investing into them, I get to be a part of their growth story. Now in terms of how much capital you should be putting into each one, you have to weigh up the risk reward. So if you have a play that's set to grow fast but it's moderate risk, they deserve more capital in the portfolio than a play that's going to grow the same growth rate but they're higher risk. So something you guys need to weigh up each time. Alright guys, that wraps things up. Hit the like button for me, helps the channel out. And if you're new, hit the subscribe button, join the journey. Also check out a link down below to the Patreon where you can join our Discord and our team of investors over there and enter some additional plays with us. Now as we progress through the week, I'll be coming at you with a ton more videos to ensure you guys are set and ready to crush another week in the markets. So as I always say, check into the channel each and every day. Stock market's rapidly moving. One thing left to say, let's go!